Code 5. Once again, I haven't seen anything in the papers whatsoever about the audit report at the last selectman meeting and the financial report at the last selectman meeting. I am beginning to receive information from my son about the audit spreadsheet and pipeline. I should have more information next week, and maybe I'll be able to talk about it. If not, I'll talk about it the following week. So what I'm going to do tonight is once again just replay last week's program, which is about the audit report. I got a copy of it from Town Hall. It was a DVD, so you can see it as well. I advise everybody to turn up their TV when watching the actual audit report, or if you're watching it on computer via a link, turn it up loud or use earphones or something like that so you can hear these people talk. As I said on the program, you'll probably hear it again later, when people talk in the selectmen, finance board meetings and P&Z meetings, when they talk from the audience, they're very hard to hear. So when you get the recordings, they're not very good. I don't know what you can learn from it. It's kind of complex. Most people don't understand the finances of the town, including our finance board and most of the leaders in this town. But I do know that we need a good pipeline of advantageous recurring revenue if we're ever going to balance the budgets in this town, because our needs are greater and greater and greater all the time, and will continue to be so. I would also advise you to watch my programs on Monday and Tuesday, Monday at 5 and Tuesday at 7:30 on Charter TV, called Spreading the Word, where we're trying to convince planning and zoning to leave Section 10.6 in the new planning and zoning regulations. The public hearing will be soon on September 20th. You should get familiar with the problem and then decide whether you want to help get the wording back in that they took out on July 22nd after a small public hearing that only 5 people attended. If you think you have development to do over the next 10 years or over the next year or two on your non-conforming property, you should contact Stephen Sedlowski, the land use director in the town hall, or Mark Melanson, the building director. Tell them what you want to do and see if it will be acceptable under the new proposed total rewrite of the planning and zoning regulations once they are approved. If you think there'll be a problem, you should attend the public hearing and state your case in support of others that are in the same position with their non-conforming properties. So now I will get on with a repeat of last week's program. I suggest that you wear earphones or turn up the volume while listening to the financial and audit reports. They don't speak very loudly because the microphones in that room are not very good for speakers from the audience.
Are exceeding the expenses, which are then used below it to pay. First amount is the repayment of the water and sewer back to the general fund, which is actually, it averages out to $200,000 a year. I wrote a couple notes on that because the water company actually only owes, and again, I'm 14 months behind. As at the end of June 30, 2015, the water company only owes the general fund $341,000 more. So at the repayment rate of $200,000 a year, it would be paid in the year you just started. Sewer actually owed more, it owed 1.2 million, so that still has several years to go. But water actually owes sewer about 300,000, so maybe when water is done paying off the general fund, it can help water repay the general fund. And then the sewer, as I mentioned before, is owed about 600,000 from Highland Lake. So if we go backwards to page 27, water and sewer, the 3 lines up from the bottom, change in net position. Water is still positive. Sewer is negative. But that negative number, as you can see on the page we just looked at, it still has a positive cash flow. That negative number is greatly generated by depreciation expense, at $880,000 depreciation expense. This is our 4th audit done for the town, and it just so happens that this year we discovered that when your fixed asset listing was created at some point, who knows, 15, 20 years ago, it's got a weird anomaly in it where every 5 years, there's a bunch of assets that were under depreciated, and if they reach the end of their life, it catches up. So your depreciation is kind of extraordinarily high in this year, and it'll dip back down next year, and it looks like they're in 5-year blips. And so these are mostly underground pipes that were put into place about 50 years ago. And they're still getting written off, but they weren't written off fast enough, so it's catching up in 5-year blips. Interestingly, water and sewer revenue decreased over the prior year, which was a problem that we identified when we started doing the audit 4 years ago. Water consumption is going down as people get more and more efficient. So your units sold of water decrease and decrease. So historically, when your rates were flat and you sold less and less water every year, you also build less and less sewer. And that's what really resulted in the deficit in water and sewer. After those statements, page 29 and 30 are the pension plan. Pension plan had $7.5 million in it. You put in about just over $400,000 during the year. I'm going to talk about that a little more later. We'll jump to page 44, which is the middle of the notes. So the front statements are summarized, and the further you go back, the more detail you get. Page 44 is a summary of the changes in the debt in the town, and it includes not only bonds and leases, but it also includes the pension obligations. So there's kind of 2 tables there. The first section shows the general government, and you can see that you're paying off your GO bonds at about $500,000 a year. You also have included in this number is heart and hypertension, pollution liabilities, but the biggest numbers in here are the net pension liabilities. So we have net pension liability of about $7 million. And then you have one for MERS, which is the state plan. That's, I think the police at the MERS. And then OPEB is your post-retirement obligation. And this is a trend in a lot of municipalities where their largest liabilities are future retirement obligations. Now granted, these obligations, your actuaries amortize them out generally over 20 to 30 years, and if you pay what they recommend, in theory, you would eventually come up to a large percentage funded. But these days, even 70, 75% funding is about the norm. It's very rare to see somebody 100% funded. The second section where it says business type activities, that is the water and sewer. You're paying off just over $400,000 a year of debt. So one of the advantages of not being able to borrow is your debt is going down quite a bit every year. The bottom of the next page, page 45, shows how much debt you'll be paying off each year for the next 5 years. So it's pretty consistent. 400 to 500 in the general fund side, and then 400,000 or so on the water and sewer side. Starting on page 49, is where you get into about 20 pages of pension notes. This is the first year of the new GASB standard that required a lot more disclosure and a lot more work from the actuaries. So on page 53, a table that shows that your total pension liability is estimated at $14.9 million, of which you have $7.5 million invested. So that leaves that liability we saw earlier of just over $7 million. Again, that shortfall would only be experienced if everybody cashed out at once. And if you follow your actuary's plan, you would never run out of money. And again, nobody's ever fully funded at 100%. So there's that. There's the page 54. Just so you know, there's a whole section on the teacher's retirement board for which you have no obligation. The state fully pays for that. But because you are a participant in a cost-sharing defined benefit plan, you have to have this disclosure. So we're now getting information from the state board who gets audited and then has their accountants prepare reports to send out to all the other accountants in the rest of the state for inclusion in their audits, which end up showing a zero. Page 69, there's yet another section on the pension. And it's all pretty new. This is the first year that you implemented 68, first year it was required. So we're just starting to build trends of year to year, but they're building tables that will show are you catching up or are you falling behind on your obligations. 3 lines up from the bottom, your net position or your assets as a percentage of the total liability, it's in the 50s. A lot of people's percentages dropped when these new measurements came in, so it's hard to benchmark because everybody's now all over the board. So you have to wait a few years, I think, and let the trends build to kind of see where you are. Then on page 77, in front you saw a column non-major funds. Starting at page 77, going up to 8 pages, are all those non-major funds. So if you cared to see what's happening in the dog fund, it's here. For the city sidewalks fund, with $864, it's in there. So some of these funds are pretty active and some aren't. Some are just kind of savings accounts with a very narrow focus that you can't spend on. Others of them, others like the JAG grant, you get that grant and spend it within a year or two. Page 79. Actually, yeah, 79. The second and third columns, these are both education-related columns, the CHAMPS funds and after-school program. And it has a balance, but my understanding is that's because they tend to get a bunch of funding for summer programs right at the end of the school year. So even though it has a balance, it's pre-funded for July and August. And then the unexpended education funds account, that's the non-lapsing account that was funded. And so the $92,000 is what's left as of June 30, 2015.
Just a comment, the non-expended education funds account is at $92,000 at the end of June 2015. 1 year prior to that, it was at $200,000, and you may recall that we authorized the Board of Education to use some of those funds during this year.
Yes.
Beyond that, there's a lot of schedules and tables. Shows your outstanding taxes, how much is owed by year, how much is collected. Same with water and sewer usage. So you can see how much is assessed and collected every year. Then there's, what makes this a CAFR, the Comprehensive Annual Financial Report, is the statistical schedules that are in the back. They often give 10-year trends. Sometimes some of them are fund balances and expenditures, some are tax collections, some is debt load, but they're all 10-year trends. And this goes back to generally as part of the bonding package. We're looking forward to that. They will look to see, they won't require that we do this. They will look at it as favorable. It reflects somewhat as tone at the top. Is the town willing to accumulate and present this information? And I've talked to some of the people in the bond industry, and they say it's beginning to almost kind of be expected. Again, it's not required, but they won't look at it and be surprised and say, oh, you do this. They will look at it and be surprised if you don't do this. And you've been doing this for many years, so it's probably good to keep doing it as you look forward to bonding. So, are there any questions? It's a lot of numbers at a fast pace. And then I assume I'll be back later with the state and federal audits.
If you were sitting in these seats right here, is there anything that would sort of jump out at you and say, gee, we ought to take care of that?
There are, at this point, the only thing that's popping up, things are still popping up from the past, such as that 5-year blip on depreciation that I mentioned.
Okay.
But nothing really significant that, again, that depreciation number, you're not building your budgets off of it. It's not really impacting decision-making. There are still, there's one fund with a balance from the old industrial park that's there's small issues, again, nothing that I think is going to impact the decision-making.
How about you? What do you think? Anything that, you know, from your perspective, from where you sit, Bruce, that would give you some concern?
The items that Chris mentioned in terms of relatively minor flaws in the internal control structure or problems with one fund or another, we have tried to address those things during the fiscal 16 year. And so I expect that when you see the next report, which we hope you'll see before the end of December, and we're planning on that, is that you'll see that those things have been resolved. And then you'll see that also in the federal and state single audit reports that you will get in a little bit. They relate to fiscal 15. Again, we looked at those things. We are aware of them. Some of them had been carried over from the prior year. And so we worked to address those things during fiscal 16 so that there will be hopefully few, if any, of those continuing. So
Okay.
Meg, I think Nancy over at the Board of Education has worked hard to do that. Of course, they've been stable in the composition of their finance department during fiscal 16. Cindy and the others on my staff have worked hard to do that. We've been stable in terms of personnel in the department for the year. All that contributes to, building a sound, a good foundation for, sound financial management, and that's what we're trying to do. So,
Good.
do I see any red flags? I'm aware of the problem with the depreciation schedules. We're working to fix that so we don't have this big blip every 5 years in those funds. So we're going to change that for fiscal 16 when we do. That depreciation is not recorded in the general ledger. It's only reported in the CAFR. It's a significant number because it indicates what the town ought to be considering in terms of making an investment to replace the infrastructure upon which we, provide services to the taxpayers. So it is an important number, but it's not recorded on our general ledger anywhere.
How far away are we from a favorable bond rating, would you guess?
One of the requirements for that is a timely issue of the audit report. And so that's our goal, is to have that for fiscal 16. And that would be, the due date for that is December 31st.
Okay.
And once we do that, then I think we can make application for a bond rating,
Right.
Because right now we have none.
No, I'm aware.
So, but the way that the town finances are running is that we have a good general fund balance level. As Chris mentioned, it's at least 15% of our annual expenditure, general fund expenditures. And we think that that will definitely hold for fiscal 16 and may even increase a little bit.
Okay.
So we think that measurement should be, should make the bond rating agency comfortable in giving us a rating.
Anybody else?
How long would that under depreciation run if we didn't take care of it this year?
Well, I think there's at least 2 more
Cycles?
5-year cycles. They were smaller. It was just the way it was set up whenever it was set up. A lot of them were 2010, so there's a lot of assets put in service 1960, 1965, 1970 for some reason, and maybe it was because they were estimations. That's likely what it was. And then, for whatever reason, maybe when they set it up, they didn't put the accumulated depreciation in. They started from 0 or something. And we're talking pages and pages and pages and pages of assets, hundreds of thousands.
Go ahead, Glenn.
Just a couple quick questions. On page 52 is a listing of the investments that I'm going to assume these are the pension funds. Is that correct?
Yes.
Who manages this?
That is Morgan Stanley is our fund manager, the manager of the investments on the pension fund.
And do we get periodic reports from them?
Yes, we actually get monthly statements.
We do.
Yes.
And do we follow their guidance implicitly, or do we ever poke around and see if?
We have given them guidelines or parameters in which they're authorized to invest.
Okay.
And those are fairly conservative, and they stay within those guidelines.
And that's
They
done.
don't- That's something that, there's a small committee that works to review those guidelines. And we meet with them once a year to review the performance and then confirm what our guidelines are.
Okay. And we're on track, and I don't remember that ever coming up for discussion, but I'm just looking at the, the spread here, and I'm assuming we're in a good position.
Yeah, I think you have to look at these things as long-term returns. And any quarter, based on the way that the stock
Yeah,
market
no.
works, you can see things going up and down.
Yeah, don't misinterpret, I'm not doubting that we're where we should be, but it just struck me today that I didn't know where or who was actually guiding the ship as far as that goes. And in our cash position, the fund balance is not necessarily a cash position, correct?
That's correct.
Okay, and where is that money held?
So we have our cash, we use 2 different banks. Webster Bank is the bank for our tax collections. And so we have about 50% of our cash at Webster Bank at any point in time. They provide us with an interest-bearing account, approximately 40 basis points. So wherever we can invest excess cash, we're doing it there.
Okay.
We also bank with Bank of America, and they have most of our operating accounts. In fact, most of the funds that you see here will have an account at Bank of America.
And so are those cash investments, are they based on any policy guidance that the Board of Finance provides, or is it basically the Finance Department guiding the process?
So both banks require us to keep a certain level of cash in their the main account to cover all the charges and the expenses. We get earnings credits based on the amount that we keep there. What we're trying to do is keep a minimum amount at Bank of America because we actually have better earning credits at Webster Bank, plus the opportunity to earn interest in an investment account. So that's our philosophy, is keep what we need at Bank of America to operate. But if we have excess cash, and that tends to happen this time of year because we just had the collections month in July and also in January, so we're able to put our excess cash in an interest-bearing account at Webster Bank.
But there's no specific policy that guides that, just the finance department doing their job.
It's the treasurer and myself, working on that and making sure we make best use of town funds.
Okay, thank you.
I just wanted to add, when you asked anything to look at, so tonight's report is pretty much a financial report. It's accounting, debits and credits. The state federal single audits would be internal controls, policies and procedures. That's what those focus on. Okay. So we'll be a whole different place.
Okay, good. Well, I appreciate your work, Chris, and Bruce, thank you for your report. It's optimistic, and I'm glad we are where we are at this point.
Well, Steve Sedlak seems like he pretty positive about things, but we'll know better after my son gets done finishing the update to the financial spreadsheet and the 3 to 5 year forecast for revenues and expenses. He'll put that out to everybody. We'll get feedback from everybody, especially MBAs and executives that know how to read spreadsheets and comment on them. And then we'll distribute it widely so that everybody can make their own decision about whether or not this is a positive report. Again, Patrick's just about done with the spreadsheet and whatever he can do with the 3 to 5 year forecast. As soon as he's finished, which will probably be in the next week or two, I'll get it out for feedback to as many people in town as I know understand these kind of financial reports and ask them for feedback. I'll do that with special people in the town as well on a confidential basis. And once all the feedback's in and things settle down, I'll put it out to the general public on YouTube so everybody can see and get a copy of it from me by email if they contact me and they have an email address. So this is going to be quite interesting to see how all this goes. And then in December, when the next audit's done, maybe we'll update it again. All depends on a lot of things. I'm kind of hoping that the town will take it over, but many people now say that there has to be a change to the POCD to require them to do so. That'll take forever, of course. So it's better, for the time being, if knowledgeable residents that pay taxes and live in the area keep these things up to date and spread them out for all to see every year. Because the truth will out here, providing we don't have any more thievery or any more major misspending. We should be able to predict things a little better. And remember now, if we can't name anybody who's coming to town and the amount of taxes that they may pay while they're going through the process, then we'll just extrapolate the past. Right now it's a little tough because of this thievery and misspending, but that'll settle down, I hope, because I think we're putting in stronger people with stronger financial backgrounds to help manage the town, with the exception of the Finance Board, of course, and the Board of Selectmen. But we've got a great town manager now who really understands business. We've got a very good planning, land use director. We've got a pretty good finance director from all I hear. We got pretty good management at Gilbert. We got pretty good management with the state receiver that is now in trying to straighten out the school situation. So maybe there's a chance that over the next 4 to 5 years, we can begin to predict things a little better and prepare ourselves for the future. Now, don't forget, bond issues are coming. These people are dying to do bond issues for the roads and the bridges and maybe other things. So it's going to be a struggle for quite a few years to come. So be prepared for it if you intend to stay in the area. With that, I'll say good night. Thank you much for listening tonight. And hopefully next week we'll have a little more information from my son. Thank you. Brian O'Haron, Financial Winstead, Episode 5. Thank you.